A panel of stock exchange officials, finance experts and regulators have discussed how the African capital market can provide the much-needed funding that the economies and business needs to grow the continent. Now, the panel also discussed strategies that the African capital market should adopt for sustainable growth and innovation. Now, let's take excerpts from the conversation held last week at the annual meetings of the African Securities Exchanges Association's conference held in Kigali.
In the industry, you have real-time experience. What has been your story going to the capital markets and looking for finance, and compare and contrast that with the story of SMEs when they're going to look for financing?
One of every SME, one of every enterprise, hustling from starting a new project, approaching a new bank, being rejected sometimes, getting the right one that supports you with seed capital. At a given point, you see growth, you don't have means to embrace growth. That's when you make a decision. We've been hearing about capital markets with too much of myth. And at a given point, we approach the Rwanda Stock Exchange. Through the investment clinic, we have to humble ourselves, learn our weaknesses, especially in the areas of corporate governance. You sit down, you learn, you get help, you get technical support, and you make one step, second step, until we made it. It was last year, 2024, and we were able to raise $5 billion francs to finance our growth. There is a blame game. The regulators would claim that SMEs are not ready, and SMEs would say we're not accessing funds. If we keep into that, we're reaching nowhere, which is why I actually have to commend the efforts made by the capital market, the Rwanda Stock Exchange. Something that came in between to bridge that issue is such initiatives like the one Jean Bosco is heading, but also the investment clinic. Get the SME ready, but clarify what the role of an SME is, because this is not a free opportunity. As he's stating, SMEs need to play their own role. This is a kind of instrument that you access for growth, that's number one, but you need to have a commitment for compliance, which is what we did in our experience. Just to give you a clear view, it took us 2 years to reach there. When we had actually raised 1 billion francs from the Development Bank of Rwanda, so we thought we were very smart enough to raise funds. It took us 2 years. So there is that role that the SME needs to understand. There is a commitment to make. There are some changes to make, and you have to be ready to follow the technical assistance and do whatever needs to be done to access the funds.
So Access to Finance Rwanda is a development partner, a special purpose vehicle that was established back in 2010 to really support inclusive finance, but also financial sector development. Now, when it comes to SMEs, among the different segments in the financial sector that are lacking access to capital, you find that SMEs actually, when you meet them, the first challenge they will share is access to capital. Though sometimes I don't agree always, but yeah, that's a problem. Now, my colleague here just shared his story, but we have actually had so many stories in this market. As DPs, we come to support on investment readiness. And the SMEs that wish to raise capital from the capital market will always not be ready whenever they have that intention. Now we come in with public funds that but on a co-pay model, because we want their skin in the game. We actually support them from different perspectives, looking at their governance, financial management, reporting, all the aspects of the business.
Square that circle for me. How do you ensure that the markets are accessible to these SMEs?
We've always seen ourselves to take a two-pronged approach. The first approach, of course, is the core regulation of the market. Regulation means you need to put in proper laws, you need to put in proper guidelines and regulations that enable SMEs like Maui to be able to come to the market. in terms of the requirements that are needed for bonds, in terms of the requirements that are needed for corporate governance. They need to be accommodative of the SMEs that are there. And that is why here we've been able to have Maui and other Africa medical supplies recently coming to the market, because apart from the hand-holding which is done at the investment clinic, the rules and the regulations are such that, in terms of the corporate governance standards, they allow the smaller entities to put in place some basic internationally benchmarked corporate governance requirements, and therefore they are not too steep in terms of that. At the same time, we also need to balance that with market integrity.
Contextualize that for us from your experience. How does it look like, and what different instruments do you offer these SMEs when they're coming to look for financing from you?
But if we look at the numbers around the world, you can see that the SMEs are mostly financed by the banking system. It is about 70 to 80% financing coming from the banking system to the SMEs. It's for that reason that I don't like too much the word alternative. The capital market is not an alternative to finance SMEs. It is a question of bringing together all the ecosystem, banking sector, market regulators, policymakers, and stock exchanges to find a global solution for financing the SMEs, and elect the intervention of the UA representative in terms of de-risking also the SMEs. For me, what is important, and you can see it, the stock exchanges have deployed a lot of effort in terms of attracting SMEs to our market. On the BRVM, for example, we invested something like 30 million USD in preparing SMEs to come to the market. We selected 30 SMEs in the region, and we prepared them for 3 years in terms of governance, financial information, etc., etc. But we don't get any of them coming to the market. So I think that the problem is not only a problem of giving them the asset to the market. We have to prepare them for more time, and we have also to think about the fact that the private sector is very young in Africa, very young, 20 years, 25 years. So we need to have more time to prepare them and to have them come into the market. Around the world, we have only 5,000 SMEs listed on the stock exchanges compared to 500 million SMEs in the world. So I think that we are not have to put more pressure on the stock exchanges for giving access to the SMEs. We have to work together and to find the solution we need to bring to them.
The international exposure started from the 16th and 14th centuries when the stock market existed. So the secret has been there. The question is, how do we convey these messages to SMEs? And the truth be told, it's not only SMEs that are in need of financing, even the large corporation. And we can see from their example, they are going to the equities market, which should be an example for SMEs to see that if larger companies are going to the equities market for raising financing, then why are we hesitating? So it is important for them to look at what are required to participate in the equities market. I talk about the readiness of companies, especially in terms of the governance, which is critical, because accountability is also an important part to build investor confidence. We talk about structure in terms of a board. Do you have a board that can be trusted? Integrity is always a big issue right across the world. And we have seen where that lack of governance and structure has caused some large companies to fail. yet it continues to be a critical part of putting everything together to come to market. Also, an important factor as it relates to the regulatory framework that exists to provide an oversight for these companies. So having access to capital is critical, but not having the infrastructure to facilitate these companies to access that capital is also another side of the point.
After really supporting the SMEs to be investor ready, I think there's another, if you take a holistic approach, you will also understand the requirements from the capital providers. And in the case of some of the SMEs that are in different sectors, certainly there's a risk profile that needs to be understood. And if the risk appetite is not there from a capital provider, then someone needs to bring some risk enhancement mechanisms to be able to facilitate the intermediation. Now, that's where we come in and say, we have been deploying portfolio guarantees in the market and with commercial banks. And the good story is that, in less than 1 year, whatever we allocated was actually, they deployed capital and the limit was exhausted. And we are currently negotiating to refill that particular limit and expand a bit. Now, these institutions that are backing those portfolio guarantees told me, and this is something that we are working on, actually to say, how do we bring now SMEs to the capital market beyond the banks? And some of them are willing to cover actually, investors up to 100%, which is very interesting. And that's a good story to tell the capital providers. But also on the other side, which is within that holistic approach, the capital market authority, or regulators, also they have some requirements. And you find that really we've been working with Tapelo to review the capital market law and associated the regulations to ensure that they are very conducive for SMEs, because you need really to understand whether, these requirements that are there would actually fit also the SMEs, which is kind of second tier. So it's very important that you look at it holistically and deploy instruments and support that is required for you to facilitate capital.